Hi there, beautiful traders. It is I, Kagiso, trading expert at Global Capital Brim, with another insightful video on technical analysis. Alright, fantastic stuff. Let's get into it. Alright, so what we're going to be focusing on today, it's a very simple but yet effective trading strategy. It's called the AB is equals to CD pattern. Alright, before we learn about the AB is equals to CD pattern, it is vitally important that you understand how to use your Fibonacci ratios and levels, because this is the measuring instrument that we use to spot out the AB is equals to CD pattern. If you're not so clued up on how to use your Fibonacci ratios or level, I've actually created a video, a very short video where I was talking about the best ways of actually using it. And even if you've been using it before, check out the video, because I'm pretty sure you might learn something new from there. Alright, exciting stuff. So what the AB is equals to CD pattern actually implies, I'm going to take us to our website over here. AB is equals to CD pattern. If you're not so clued up on the definition, you want to get something written down, check out the definition over here. It's actually quite free, and read up a bit about the advantages of Fibonacci levels, because the reason why we use these Fibonacci levels is because these levels are actually accurate. I'm not going to go over the whole thing, but then do read up on this whole passage, because I've given as much information as I can in terms of the ABCD pattern, Fibonacci retracements, on how to trade them, and also the best ways of implementing them into your trading strategy. Alright, fantastic stuff. Now back over here. Alright, what we need to do is that we need to start by drawing with the Fibonacci levels. Start at the bottom, take it to the top, as if it's an up movement. And as you can see that we're finding resistance around this level of the 50 and around this level of the 50%. So with the ABCD pattern, one thing that we look for these levels, which is the 50% as well as the 618. These are the points that we usually find the most resistance, and the furthest that I'd go with it, I'd go to levels of 786. I would not go further than that, but as a lot of things in trading go, a lot of things are subjective, so you need to have you need to be able to make your own call. And then, because sometimes right now this one is actually it's quite clean, because there's only resistance at the 50%, but more often than not you do get the dirty ones whereby there's a bit of a wick going down here, and then the market closes here, and then there's a whole, you're not so sure, is it 50, is it 60, did it go down there? You need to be subjective about the whole thing. But then over trading it over the course of time, you get to see a bit of market manipulation, you get to see the fake outs, you get to see the fake wicks, you get to see everything. So it's quite exciting. So when the market gets to the 60% or the 50%, when the market gets to the 618 or the 50%, we're looking for any sort of candlestick confirmation or rejection that can be happening. So what this whole pattern entails is that the market is moving from this point over here, gets to a point, makes a high, comes back down, retraces, and then shoots back past its high point. Okay, so what the ABCD pattern, if we had to point out all of these points, we had to start at the point A. Oh no, this is awful. We need to start off with point A. Then this is our point B, and this is our point C, and this being our point D. So market moved from point A, from point B, then point C, and then point D. Alright, so now that we understand how the ABCD pattern looks like when it's complete, now we need to understand how we're actually trading it. So the market starts off by point A, moves up and forms point B, then retraces back down and forms point C. Then at point C, this is where we're looking at actually entering the market, because how we make money from this pattern is that we're making money from the completion of leg CD. So we're saying that since there's a rejection over here and there's going to be more up movement, it'll move at a proportion that is similar to length AB. So we'll be looking at taking a buying position over here. And one thing that I like about the AB is equals CD pattern is that it's quite specific on where your take profit actually is. And funny enough is that sometimes it even goes overboard. So we'd be having an extension like this one. Let me delete this. What you do is that you take your Fibonacci after your measurements over here, and you put your 100% where the 50 mark was, and over here this is where our take profit would be. So we need to take our take profit and extend it over here. So like you can see, looking at how much you had to risk, because you had to tighten up your stop loss over here. I don't go past 786, so it'll be somewhere around here. And looking at the risk to reward on this trading strategy, you would make some decent amount of money. You're risking a fairly small amount and the money that you'd make if this trade was to play out your way. One thing that I like about this strategy in particular is for the fact that you, more often than not, you get to make even more money than you expected, for the fact that you can take up multiple positions on the way up. And there's a specific take profit that's there, so you know when to come out the market. You're not going to be there and have a point of uncertainty of when are you coming out, because you need to have an entry plan as well as an exit plan. Okay, so another important point that I need to make is that this strategy line AB is equals to CD. Although this strategy goes as line AB is equals to CD, it does not necessarily mean that this line CD is going to be the exact same length. What it's actually implying is that these two over here can actually be at a ratio. Okay, so you can put, there can be a 2 over here, which means that this one, line AB is half of line CD, so this one's going to be double the length of this one. So if your take profit is over here and you can see that the market is still pushing in the direction, instead of taking profits, you can move your stop loss into profit and then try to monitor the trade and see how far you can go with it and ride it. This does not mean it equals to, this is something that's very important that we need to understand, but it's more or less like good direction of how long the line CD will be when it's forming, because we need to make money from the line CD forming. Check out our video on Fibonacci ratios. Check out our videos on trading channels. Improve your trading, learn as much as you can, and yeah, send us a WhatsApp if you have any sort of questions about trading or how to actually profit from cryptocurrency. It is me, Kagiso, voice of the crypto, signing out. Thank you very much.